Welcome back to Morning Trade Live. It's time for the Market Meetup panel. Earlier in our conversation this morning, we talked about the latest on those tariff headlines, Canada imposing tariffs, and now maybe cars getting involved between the EU and the United States. All right, I want to bring in our guest. Scott Bauer is joining us today. He's the CEO of Prosper Trading Academy. Welcome to the morning show, Scott.
Great to be here.
And we also have Stephanie Lewicki and Nick Theodorakis here from TD Ameritrade as well, guys. Good morning. All right, so Scott, once again, we look at a market that is selling off based on this. Are you getting tired of this as a trader yet?
You know, it is almost the story of the little boy that cried wolf at this point, and I think that traders are looking at that. I'm not so sure that the retail investor is looking at it that way. Traders are definitely looking at it that way, and almost poo-pooing the news, honestly. You know, I was down on the floor earlier this morning, and you know, it's just business as usual. Obviously, it's a pretty slow week volume-wise with the holiday this week. So, you know, market moves can happen in an instant this week because of the low volume. But, you know, overall, the consensus, at least from the professionals on the floor, is that, you know, this is going to get worked out. It could be a buying opportunity, could be a selling opportunity for volatility as we see volatility rise every time that, you know, a new tariff, new trade war rhetoric comes out. But, you know, we'll see what happens in the next coming weeks and months. I personally think at the end of the day, this is all going to smooth over.
Maple syrup, ketchup, whiskey, all kinds of stuff that is now going to be charged going from the U.S. to Canada, Stephanie, on 13 billion roughly. And we've also got our deadline approaching. So traders love to have this sort of volatility and opportunity. We talk about it here a lot, but then at a certain point, you know, as Scott mentions here, you might say, you know what, throw up my arms because I don't really know what gets hit next, or, you know, why one sector is sinking the rest of the entire S&P.
Yeah, you know, and these tariffs, they're hitting Trump where it hurts on the whiskey tariffs, right, in Kentucky, which is one of the states that voted for him. But I think, too, is it's getting very confusing to interpret who's putting tariffs on who and on what goods and what the final impact is going to be. And I think I agree with Scott. It will get worked out in the end. I don't know when the end is going to come. This has been going on for quite some time now. But in the meantime, I think investors, you know, he's taken from what the floor traders are saying. But as we saw, the market was solidly up on Friday, and then some more stuff on tariffs came out and sold off pretty hard into the end of the day. Still closed up positive, but then today overnight the market's been down a decent amount, and we're still down right now. So it's as again Scott said, a low volume week with the holiday, but it can tend to lead to volatility because of the low volume, and it's let's see how this gets worked out.
Yeah, I think the one thing is that the numbers are getting bigger, right? The EU said 300 billion.
Yep. If we go after cars,
right? So, you know, I think you guys are right. It will get worked out, but right now it's so pointed, right? We're going after Wisconsin products because Canada doesn't like what Paul Ryan said. We're going after maple syrup. I'm not sure that's going to take down the S&P here, right? But like, there's some.
It's so weird that Canada is putting the tariffs on our maple syrup. I guess because they've got plenty of their own already.
I guess I don't know, but it feels like the numbers are getting bigger. 300 billion is a big number, and I think.
And we're getting closer to deadlines.
That's right. And if that doesn't work itself out, I think these numbers come to fruition. That's huge.
So from your perspective, Nick, you know, within the idea of risk management, right? I would think that as we get closer and closer to these deadlines, the possibility for sort of a tail risk scenario gets larger, does it not? I mean, do you have to brace yourself as you get to a reality where things are now actually getting charged?
Well, I mean, we talk about this, I feel like, every time I'm on, but VIX was 9, right? It was constantly 9 and 17. We're 17 right now, right? 15, 17, 20 feels like the new range, and the market's pricing in some of that, but to your point, I don't know that VIX 17 is pricing in a tail event yet. I think there is some possible downside here.
Scott, when you look at a day today where VIX comes back down, but it's still at 17, right? And you say, you know what? Or let's just look at the past 2 weeks. Volatility has climbed. We're at 17. Let me sell this because of this tariff stuff is overblown. You're essentially making a bet, though, that whatever the tariff resolution is leads to a VIX lower than 17. Because we don't really know what a full-blown trade war leads to in terms of volatility, do we? I mean, this could be low compared to what the result might be.
Absolutely, and that's why when you look at VIX, you know, that's looking a forward-looking 30-day move into the future here. I'm looking at individual equities, and I'm trying to pick and choose which one of these stocks that we're seeing pumped up volatility, whether it be a Caterpillar, a Deere, a Boeing, Lockheed Martin, stocks like that have been affected. I'm looking to combine that with maybe some technicals, some support areas, maybe some moving average areas, take advantage of the excess volatility. Now, I'm not saying just go out and sell options, sell volatility, but you can spread things off and you can put the reward to risk in your favor. Now, if we do have that tail risk and something happens, okay, I'm going to take the loss, but at least I know what my stop out point is. So, I'm going to play the numbers. I'm going to play the averages here. I'm going to play the rhetoric, at least I am personally, and sell some of this volatility.
What comes to mind? What are some easy examples of that where volatility's got unnecessarily allocated, if you will?
You look at some of the stocks that I just mentioned, and especially like in a Lockheed Martin, I think it's a fantastic time to sell some volatility. Now, that doesn't mean just sell put spreads because the stock, maybe has bottomed out or the stock is going up. That could mean selling some upside call spreads also, and just taking advantage, because if the stock does move up, we're going to see volatility come back in. So I think there's plenty of tariff stocks like that where there's great opportunity.
Pretty tough chart for Lockheed.
It's a good way to play the market with these option spreads if you think there's volatility and you're not just trying to be a stock picker. And also, I think you mentioned put in your stop orders. It is going to be a slow and slow volume, but it could be a volatile week. So enter those stop orders going into tomorrow is a half day, and then we're off on Wednesday for the holiday. But that is another way to play the market. And then just remember, we've talked about before the ripple effect that these tariffs can have. If you're some of the FANG stocks took it pretty hard last week or the week before with the investment restrictions that could be possible, that and some of the semiconductors got hit, and those are some of the companies that go in and work alongside Apple.
Well, I love to use the example of Boeing that Scott mentioned. If we bring up the year-to-date chart or the one-year chart for Boeing, what you're going to see is a pretty steep red line southward since June. And, it's an easy company to target in this conversation, right? Because there's this knee-jerk sell reaction that happens where somehow the collective conscience of the markets identified Boeing and Caterpillar as the two companies that will just get rocked in a trade war. Yeah, Boeing's got like 7 years of backlog. Every time they report earnings, they just seem unstoppable. We hear about new orders all the time. So to Scott's point, Nick, there's probably going to turn out to be places where they became the icon of this trade situation when they shouldn't have been.
No doubt. You look at it from a sector standpoint, right? We're putting tariffs and taxes on technology and hard goods, metals, right? And the rest of the world is saying we're going to tax your agriculture. I'm not sure how that translates into Boeing. Lockheed, same way, right? I think there's a defense play here. You could see them bounce, but I do think that there's been some darlings and then the opposites that have been picked here by the street. It doesn't feel quite right. I totally agree with Scott. There's some pockets.
Yeah. All right, guys, we're going to take a short break. We're going to talk about a pocket that maybe got filled because Elon Musk got his way, at least right now, for the past series of rollouts on the Model 3. We'll be right back. We'll talk about this news. Is it enough, or did the cost associated with getting this done, human capital as well as cash being burned? We'll be right back. We got a lot to talk about for Tesla on the TD Ameritrade Network. I'm Oliver Rennick.
I'm Ben Lichtenstein.
I'm Victor Jones.
I'm Kevin Hayes. I'm showing you on the screen here right now the NASDAQ, the ES, the Dow, the Russell.
You can see the pop right there overnight.
This stock, best performing stock in the Dow. It's up 70%.
As an investor, do you need to think about how this affects the overall business strategy?
People miss the boat in that they don't have a plan when they get in, and when the stock goes against them, they panic.
Think about the duration of whatever you are investing in.
We're going to look at the company profile on the mobile device.
If we can start to make it easier for our clients to work with us through modern technology, modern tools, and greater degree of investor education,
Yep.
then that'll be a source of growth.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
On Real Talk, I sit down with some of the brightest minds in finance. Having some knowledge and an education level yourself, even if it just helps you ask better questions, will benefit you in the long run. Knowing what your priorities are and knowing the environment that you're investing in is always the key to investing. Tune in today for Real Talk with me, JJ Keenan.
Welcome back to Morning Trade Live, where we are looking in the break here at an equity market that's trying to push to the upside. I want to bring in our guest, Scott Bauer, is the CEO of Prosper Trading Academy, Nick Theodorakis in financial risk management at TD Ameritrade, as well as Stephanie Lewicki, Senior Manager of Futures and Forex. All right, guys, Steph, start us off here, because in the break, we're talking a little market action. Russell's trying to make a comeback here.
It is making a comeback. It's one of the indices that just turned green, and as we were watching that, and we've been talking about the Russell for quite some time on the Future Show in the morning, and it's become what we think maybe that flight to quality trade, as it is very little international exposure to these tariffs, and it's benefiting most from all the tax cuts, and it has a majority of regional banks in it. And now we see, and gold, that typical normal safety trade has not been participating. Yeah. Gold actually now it's down almost 0.5%, and that
gold has
been a wreck. So the Russell now, it was down quite a bit this morning in the middle of the night, 1.5%, and it just turned green. So the reason why right now, I don't know, more trade tariff talks?
One last thought from a trading perspective on this before we talk about Tesla in our programming, but just I want to make note of this market action, because we started off pretty deep in the red.
Yeah.
This doesn't mean we're turning the opposite way, but clearly there is a push here to try and get markets up. There's some kind of bullshit. Scott, my question has been for the small caps, get the domestic trade, get the trade insulation, but does that mean because of those items, people are just finding this as the place to go to deploy a little bit of risk, to get a little bit of exposure to the market and say, you know what? Bonds still aren't giving me much. I'm not really buying the inflation story. Let me just buy stocks, but I don't know if I want to buy the Dow, and I don't know if I want to buy Boeing from the conversation we just had. So let me buy these Russells.
It's obviously been a great trend trade the last 3-4 months or so. Like we've talked about, it's been the hedge. I'm not really certain why, but I think we do run a risk that whether it's 3 weeks, 6 weeks, 3 months down the road, if some of the tariff talk starts to ease, if things start to get back to, let's call it, a sense of normalcy, I think we might see a swift sell-off in the Russell as people start to allocate their investments elsewhere.
All right, guys, let's talk Tesla. Nick, start us off here. Elon Musk very excitedly tweets 7,000 vehicles, and then within an email that was released or leaked or whatever you want to call it, reported on by multiple sources, the clarity within that 7,000 was greater than 5,000 number that was reached for those Model 3s, which is supposed to be the high production vehicle. We know that was the goal. So are we in the clear? Are Tesla bulls in the clear?
Well, chart says yes, right? We're almost back. We're within $30 of all-time highs or something like that, right? So, it's the Elon Musk story. He's got that entrepreneur attitude. If he says they're going to do it, they're going to do it.
Yeah.
The question is it sustainable, right? They set up a tent factory outside. They took all the automation out because it wasn't working the way he wanted it to. And he did come out and say, I over-automated this line ahead of time, right? He said, classic fail, you want to get the process right and then automate. I think they'll get there, they'll be able to sustain it, but right now there's a short-term question of, can they keep up this 5,000 Model 3 number that they've committed to? The other thing we were talking about over the break, right, is there's a cost to their other production. They produce everything in California. They only made a couple thousand other cars, right? The high-end vehicles weren't keeping up production. So if we see that lag, that could eat into their profits too.
Scott, this has been a crazy back and forth between the bulls and the bears, the skeptics and the believers, more so than ever. This is, a piece definitely today for the believers, but to Nick's point, it came at a big cost. Let's not forget firings, layoffs, the automation story, cash burn.
Huge cost. And what's really interesting to me is this car has always been billed as the $35,000, luxury electric vehicle.
Yeah.
That's not what's being produced here. The cars that are being produced are the $60,000+ Model 3s. That's not what is, as far as I know, that's not what the 500,000 people or so that have put their deposits down for this car. That's not what they're expecting. So what I want to know is, if they can maintain this production, how much of that production is actually going to go into that $35,000 or $40,000 model car, where the margins there are much less than they are on these luxury ones that they're now putting out.
Well, just last week we talked about how Elon Musk and the company said even if you reserved a Model 3, basically $2,500 to confirm your order. So for some of the lower end prices, they're maybe hurting on that a little bit. Stephanie, come in here. What do you think?
Yeah, we did talk about it last week, and it was, a way for him to get some more cash up front that said if you want to start production on your car, you got to give another $2,500, which will go to the car, but it's a unique way. And as Nick said, he did set up this tent, which is stuff that you would look at and say, wait, this is Elon Musk. Aren't car makers, this is something from 50 years ago. They were setting up tents. And then he probably took workers from other parts of the business. So other parts of the business probably are getting hurt for him to make this deadline. So I can really see both sides of the story here, though. It's Elon Musk, that entrepreneurial spirit that he has to get this done, or is it like, this guy's crazy. He's going back to methods that car companies were using 50 years ago to get stuff done. And I think you do with that cash burn story. I briefly saw something that where their cash is positioned right now is the same spot where GM was when GM had all those issues. So,
yeah, they say that they're going to be. They've maintained their cash flow outlook, which is supposed to be positive for third and fourth quarter. Elon has said he doesn't need to raise, but this is really the question that needs to be there. I mean, the production hitting the mark for 5,000, crucial to keep the pieces of on the board to keep playing, basically.
It was a bit of a tricky move, right? To say, put 1,000 down, you're good. Well, now you have to put down 2.5 times as much up front before the car, long before you're going to get your car. But I'm not going to raise capital. So, I think there's pressure, right? There's no doubt about that. But I think what he proves time and time again is he's going to spend 3 days sleeping under his desk in the same clothes to get it done, right?
Right.
He also launched a rocket last week to the space station. So, when he puts his mind to it, he shows up. I think things get done. When he's multitasking, things slip a bit.
Scott, does any of this matter though until we see the cash flow numbers by the end of this year? If he has to raise, is everything back on the table in terms of whether or not the whole story breaks down?
Well, it certainly matters in terms of the Bulls taking charge right now. I'm very, very, cautious moving forward here. We're supposed to get some numbers coming out later this week, what their expectations are. But yeah, I mean, the story is still probably in the very early chapters here. And like you just mentioned, we're going to see later in the year if they really do have to raise money or not. I think it's still probably better odds that they will have to than not. But, that's what the option market is for. That's what the derivatives market is for. And if you look at this stock, you look at the implied volatility in the options, it's certainly suggesting that it is not, the story is far from being over here.
Yeah, and it's an important milestone because if and when he does need to access those capital markets, he can say, look, those Model 3s, I got to the 5 that you said. So a pretty key moment.
It is, but again, who knows what is going to happen 3 months from now? And again, what are the margins on the $35,000 car, which a good portion of these people have plunked their $3,500 down now?
There we go. All right, Scott Bauer, we'll leave it there. Well said, Scott Bauer. Appreciate you joining us here this morning.
Pleasure.
All right, CEO of Prosper Trading Academy, as well as Stephanie Lewicki and Nick Theodorakis of TD Ameritrade here. All right, that's it for us on Morning Trade Live.